crash course on Canadian high inflation and economic recession concerns. Canada has been facing concerns about high inflation and a potential economic recession in recent months. Here is a crash course on the situation, along with some statistics and forecasting data to support these concerns. 1. High inflation. According to Statistics Canada, the country's inflation rate hit a 10-year high of 4.4% in November 2021. This was well above the Bank of Canada's target inflation rate of 2%. The main drivers of inflation have been rising energy and food prices, as well as supply chain disruptions caused by the COVID-19 pandemic. 2. Rising interest rates. In response to the high inflation, the Bank of Canada has raised its key interest rate twice in recent months, from 0.25% to 0.5%. This is a significant increase, and could lead to higher borrowing costs for consumers and businesses. It could also slow down economic growth, as higher interest rates tend to lead to lower spending and investment. 3. Economic recession concerns. Some economists are warning that the combination of high inflation and rising interest rates could lead to an economic recession in Canada. A recession is typically defined as 2 consecutive quarters of negative economic growth. While Canada has not officially entered a recession yet, some indicators suggest that the economy may be slowing down. For example, the unemployment rate rose to 7.4% in November 2021, up from 6.9% in the previous month. 4. Housing market concerns. The Canadian housing market has also been a cause for concern, with some experts warning that it may be in a bubble. Home prices have been rising rapidly in recent years, and some cities like Toronto and Vancouver have seen prices soar to unaffordable levels for many Canadians. If the housing market were to crash, it could have serious implications for the broader economy. 5. COVID-19 pandemic. Finally, it's worth noting that the ongoing COVID-19 pandemic is a major factor in the current economic situation. The pandemic has caused supply chain disruptions, labor shortages, and other challenges that have contributed to rising prices and slowing economic growth. These concerns about high inflation and a potential economic recession are understandably causing anxiety among Canadians. However, it's worth noting that the situation is complex, and there are many factors at play. Some experts believe that the current inflation spike is temporary, and that the economy will recover in the coming months. Others are more pessimistic, and warn that there may be more serious economic challenges ahead. Regardless of the outcome, it's clear that the situation is a reminder of the importance of careful economic management and planning. Canadian policymakers will need to balance the need for economic growth with the need to control inflation and ensure financial stability for all Canadians. It is worth noting that Canada's economy has historically been resilient and adaptable. Despite challenges like the current inflation concerns, the country has a strong track record of weathering economic storms and coming out stronger on the other side. Additionally, Canada's diverse economy and welcoming immigration policies make it an attractive destination for entrepreneurs and investors from around the world. The country has a vibrant startup scene, with many innovative companies emerging in sectors like technology, healthcare, and renewable energy. This suggests that while there may be challenges in the short term, Canada's long-term economic prospects remain bright. Furthermore, Canada has a highly skilled workforce and a strong education system that can help drive economic growth in the long term. The country has a high proportion of university graduates and invests heavily in research and development, particularly in areas like artificial intelligence and clean technology. Finally, it's worth noting that Canada has a long history of innovation and entrepreneurship. The country has produced many successful companies and entrepreneurs, including household names like BlackBerry, Shopify, and Cirque du Soleil. These success stories suggest that Canada's economy has the potential to continue growing and thriving in the years to come. Regardless of the outcome, it's clear that the situation is a reminder of the importance of careful economic management and planning. Canadian policymakers will need to balance the need for economic growth with the need to control inflation and ensure financial stability for all Canadians. Here are some tips to mitigate the pain of high inflation and possible recession for all Canadians and visitors. A. Improve your purchasing decisions. With persistent inflation, delaying a purchase can be costly since the price is likely to rise in the future. Therefore, you should prioritize buying essential items and avoid impulse spending on unnecessary things. B. Be a more intelligent shopper. You can save money by comparing prices, looking for discounts, using coupons, buying in bulk or choosing generic brands. You can also shop online or at local markets to find better deals. C. Take advantage of low interest rates. If you have a mortgage or other debts, you can refinance them at lower rates to reduce your monthly payments and save on interest costs. You can also use low interest rates to invest in assets that can appreciate in value or generate income. D. Invest in asset classes that are inflation hedges. These are assets that tend to increase in value or provide returns that exceed inflation. Some examples are real estate, commodities, stocks, gold and cryptocurrencies. 12. However, you should be aware of the risks and diversify your portfolio accordingly. E. Purchase an annuity to pay essential living expenses. An annuity is a contract that provides you with a fixed income for life or a certain period of time. You can buy an annuity with some of your savings to cover your basic needs such as food, housing and healthcare. You can also choose an annuity that is indexed to inflation so that your income keeps up with rising prices. F. Invest in work-related skills. One of the best ways to cope with inflation and recession is to increase your earning potential and employability. You can do this by upgrading your skills, acquiring new qualifications, learning new technologies or expanding your network. 1. This can help you secure a higher salary, find new opportunities or start your own business. Overall, while the current concerns about high inflation and a potential economic recession are certainly significant, they should not overshadow Canada's many strengths and assets. The country has a stable political system, a well-developed economy, and a high quality of life, all of which make it an attractive destination for immigrants and investors alike. While challenges may arise from time to time, Canada has a proven track record of overcoming adversity and emerging stronger on the other side. We hope this video has given you a taste of all the incredible experiences Canada has to offer. If you're ready to start planning your own adventure to Canada, please ensure to use our Booking.com referral link. https://www.booking.com/index.html?aid equals 7989335 to book your flights, hotels, car rentals, local attractions, and more. It's an easy and kind way to support this channel and make sure you get the best possible deals on your trip. Thank you. Anhub Metaverse team at Vancouver, Canada, CA.